What's up, guys? Hope you're doing good. So today I want us to do the look at a trade, and today I want to look at the Euro USD. And allow me to delete what I have here in my chat. So to look at the Euro USD, we're going to do the top-down analysis, and I want us to see what to expect from this pair. You can see it's been pushing lower, but let's just do a top-down analysis from the record of where the market's been pushing from. So you can see that it's been bullish, and you know very well that every time my concept symbol price goes higher, and before it break the structure, I want to see liquidity taken out, take out the low, and mitigate anything, pull back, break the structure. This is my high, this is my low, and I have to take out liquidity like that and break the structure. Let's take out liquidity below. If you check my previous video about liquidity, you understand and process continuous that. So let's have look at this, and when you look back, this is where this pair started from, pushing to the upside. You can see here in this pair, my first pullback, I'll pick this one because it's more visible. That's my first inducement, and if this is my first inducement, this is my high. Then if we break this structure, I know that now will be the market structures bullish. And actually, that's where the high is. And what's the low? Is the low here. And again, from this structure, we see there's a, we see that there's a one pullback here, price goes higher. If we take out this low, confirm the high. So inducement is here. This is a high, this is a low, and this is a break of structure here. This means that the market is really pushing higher, and I want to confirm if there's a valid pullback here, and here we got a valid pullback here. So takes out this level for inducement. Expect the market to push the upside high, and when we break that high, the upside, the structure, boss is low, inducement there, so high. If we violate this low, we get a change of character. So let's see here, price goes below and it's at that level, which is a change of character, and it's confirmed around here. So once you get a change of character, we know that the market has shifted to the downside, and we can also be looking for it to push to the downside because the market itself is pushing to the downside. So let's see what happens here. So look at this market structure. Price kept going low, so my inducement is here. This is my low, and this means that if we close above here, we actually get what we call a change of character. So I'll not want to see this market closing above that zone. So we do here, let's see, closed above the zone, and this means that now we have a change of structure, and we are very bullish into this market structure, and this is the lowest point we have. So when you look at this market, you realize that the way it's been pushing higher from the monthly time frame. This is your first pullback, which is an inducement here, right? But around here you have, and call this level a major inducement, major liquidity phase there. So this will be your high. And remember, you always want to buy below the liquidity. That means this if your market structure is bullish, right? And you take out inducement, so you have something like this, and price goes higher. So we have something like this. We have a zone that looks like this, whereby this is your inducement, and inducement taken out, this is your high here. And once you have that high up there, and you break the structure like that, boss, then this is your low. And probably this is the low that pushed the price away. It's going to act as your valid pullback, which is an inducement. And you want to have your demand zone below the inducement. And always you'll have decisional and extreme. For example, let's see that my inducement was up here, right around there. You'll have your extreme demand and your decisional levels. So whenever the market comes to the downside, you can buy from here, or if that level fails, then you buy to extreme. You target the price to go to the upside. So those are the things you expect. So when you look at this market structure, this is a major liquidity phase. This means that your first demand zone will be around this area, as this is the retail accumulation order blocks, and this is your extreme. So if the price that comes here, you buy, or here. And when you do this, see that after taking out liquidity, the market dropping towards the demand is what you're seeing, like what I was explaining here. Price dropping towards those levels. You can buy the first one or the second one. So looking at this was the first one. And price tapped into it, try to go higher. It seems it's gonna come back, and if it's come back, then it's going to that extreme demand. So if the price is gonna go there, look at this, when the price was broken to the downside, actually mitigated this order flow. The order flow is the last, in a bearish market, the last buy before the sell, after taking out this extreme high here, right? So this is your low, this is your high, and since we broke the structure towards the decisional demand, course, the market seems to be failing, and there's an idea of the market pushing towards this level. So we can actually look at this as what as a trap, right? We call it trap zone. SMT, smart money trap. And we're heading here towards this level. So from here, I can look at this market structure using like the weekly market structure. And on the weekly, I see this is my major high, and the price has been pushing lower. So from the weekly point of view, I see this as my inducement here. This is my inducement. Low. Price went higher. After price pushed higher, we can see nothing good here that was mitigated, because levels of interest at levels like this, they'll want to see them just as supply zones here. And here I see this order flow mitigated already, and this small order flow here. Okay, this is another zone that is not mitigated. Then we see everything is mitigated. So having those levels, then we see that this market structure, there's a way it's playing around. So for us to see it properly, we need to change our time frame and look at it using the day time frame. That's how I break down my market time frames. Whenever I want to look at a zone very well, I'll break it to the weekly to daily, and I'll follow the same concept. And when I come here from the source of demand, this could be what we call the daily change of character. Let me show you. How do you get the change of character? Let's say if the market was bearish, let's say pullback, takes out the liquidity and break the structure, right? It can take even out liquidity and it will do something like this. This is how you identify from what we call the change of character. Because number one, you have inducement here, and you have a break of structure here. Once you have this, then this means that you have what you call the high, the low, and this high low is confirmed after taking out this particular inducement. And again, you've broken the structure. Once you've broken the structure like that, you have this as your protected high. And the moment your inducement is taken out, you have your low. Then if you violate the high, that you get what? You get your change of character. And once you get the change of character, this will be the low that push the price to the upside. Your inducement, and probably you get to buy it from that particular low there. And this tells you that the price is pushing higher. So when you look at this market structure from here on daily time frame, we can see that previously it has been pushing to the downside. Look at this inducement. The low, the high, the break of structure here, both. And again here we have what we call a smaller pullback here, which is valid inducement. And this is a low, this is your high, because you have a candle close, break of structure here, right? And as well, you can see another pullback is here, which is an inducement, and this is your low, your high, and you have a break of structure here, boss. And where's the next inducement? The next inducement here, this is a high, pushing the price away, acting as the inducement. And if that's the inducement, this major high here will act as what as your change of character according to daily time frame, and price started pushing high. And if the price is gonna push higher, you need inducement for you to continue buying. So once you get the change of character the same way, once you get the change of character, you have to wait for the market to take out inducement, and you can buy below the inducement. So according to this market structure, this is a low pushing the price up. You look at it as our inducement, this is our high. And probably I'd want to mark this area as the OB, which is acting as your demand zone there. Now, price mitigating that zone, we are getting a new break of structure in this area here. Getting that break of structure, and you identify again the low that pushed the price away, which is an inducement here. Is your high, and probably look at this is your OB, because the huge candle that has sold everything to the downside, and is your candle of interest, because you have what we call a sweep. Look at this, you have very nice sweep of liquidity. So once you have that sweep there, and not just there, you can see there's another sweep here of this low. So this candle becomes your OB, and you can do what you can now do, use it as your candle of interest. So this becomes like demand. And mostly when you want to use this demand zone and they are huge like that, you need to go to a lower time frame, like the 4 hours if you're from the daily, go to the 4 hours and refine, take a half, either you take a half of that demand in the higher time frame, or you narrow down to like the 4 hours and you look at the zone and take a refine or B from where that level is. So let's see. If we look at this area, see when we refine it, this was the OB, we can see a very clean and mitigated the block here in 4 hours, and this can be your demand. Adding what we call the advanced OB here, advanced area of interest, then this becomes a very, very well standard demand zone. So let me go back to daily. And when I go back to daily, this is the area that I've looked at. You see, have that gap, road over gap there. And if the price comes there, you can just buy to the upside. Now, having that in mind, and if we push higher and we close above this zone, then we get a new break of structure to the upside. And if we get the new break of structure, this means that the market is pushing higher. And what do we have here? This is a low pushing the price to the upside. We should look at it as our reducement, and this is our high. If that is our high here, then we have our low. If this market breaks this zone, then you get what you call a change of character. This shows you that the market is intending to push lower. And here, once we are here, you can see our inducement is here, according to daily. And if this inducement, this is your low, and your what we call the engineering liquidity is here, engineering liquidity, and you will not want the market violating that high, so this will be your extreme supply zone, sorry. So when you look at this zone, you want to see the market taking out the liquidity. They are taken out, and this year, demand up there at the extreme, price mitigates the level and pushes to the downside. Breaks below that zone, that's your new breakout structure. And your high is here, high low, I mean. So the market's around this zone, and I can see now if the market's pushing lower, remember, it needs to go higher, take out the liquidity. Before the drop, break the structure, this is the liquidity, goes higher, mitigate anything here, then boom, I sell to the downside. So according to this market structure, what I'm seeing here, after the breakout structure, what I'm getting to see here is this high pushing the price down, acting as what? As your inducement. And if that is your inducement, then this is your low here. And if the market goes past this low, break the structure, then you have your lower high around this zone, and the pattern repeats itself. So according to where the market is, this is the high that should be taken out, but let me confirm something. Is it the correct one? Yeah, it's correct. It's correct. If that low was taken out, then that is a valid zone that the market really, for it to go down properly, we really need to take out that high before a drop, because that is our liquidity zone, and right here we have a very nice supply just above the zone. Yeah. So here there's a lot that is happening, and you know, a good trade right now, like when you're trading this euro, the high probability is when you're selling than when you're buying, because when you're buying it fights a lot. You see, it fights a lot, but it drops the bigger moves. So they're bearish, and actually we're heading towards this level, below here. There's a demand. There's a demand here, a monthly demand zone that we're heading here, and this is around how many pips? This level to where the market is. Around 1,000 pips. Here's where we're heading. So if we have that in mind, and we can narrow down to 4 hours time frame, look at the same structure. If we look at it on daily time frame, the market has failed to do it, to take out liquidity, but you can see on the 4 hours, we've been taking out some liquidity and push to the downside. So this is where we are. And the market here, we have a level that we should look at. We go low and we break below that structure. So we need to break below that zone. So here there's two things, because I don't want to give a low probability setup. So here there's two things. If we go higher and we take out that high and we tap into that zone, we push to the downside, very nice. And if we go low and we break the structure, expect the market to still go high and take out that level, because that is a high time frame level, a daily level, it goes lower. So if I want to buy, I'll be more comfortable to buy after this low has been taken out, because this will be the liquidity for those who bought the move taken out, and I can use that as an advantage to buy to the upside, Let I take out this low, then I buy, it goes high, take out that level, and I sell. So this is a setup that I think worth waiting. And let me just go to now and see if there's anything. Okay, no, now there's nothing, because most of the setups were supposed to be, like you see, there's a lot of liquidity here. Let me show you. If we look at that, there's just more liquidity than ever. And this means that if either we break this structure first to buy, or we go higher. So this is just a setup that I think is worth waiting, but it has a higher probability to play out. So I'll reach here for today. And then now I've started a series of doing at least 3 to 4 pairs in a week, top-down analysis, and make sure that whenever you get to YouTube, you get watching these videos, subscribe, leave your comments and like, and also you can say what you want me to analyze. Then I'll always go through your comments and be able to answer your questions. So guys, thank you, and I hope I'll see you in my next video.